Never take Social Security early. Always wait as long as possible. Sound familiar? Whether it's online, from friends, or even from financial advisors, this is almost always the advice you'll get when it comes to Social Security. Now, it is true that waiting often makes sense. But did you hear what I said there? Often, not always. In real life, real people, real portfolios, real spouses, real health situations, there are plenty of scenarios where taking Social Security at 62 is not a mistake at all. In fact, it can be the better decision. That's why in today's video, I'm going to walk you through 5 good reasons why it can make sense to take Social Security at 62. And at the end of the video, I'll show you how to get a free video review from us so you can see for yourself how Social Security fits into your own retirement picture. Hi, I'm Jared Kenney, Wealth Advisor at the Noble Group. I've had over 20 years experience helping people just like you make these decisions on Social Security. So I'm sure you're wondering at this point, why is the standard Social Security advice misleading? Well, if you've ever run a Social Security calculator online, or maybe attended a Social Security seminar, you've probably seen this analysis. It compares benefits at age 62, full retirement age, which is 67, and age 70. Then they draw a chart showing cumulative benefits over time. Somewhere around age 80 or 81, the lines cross. That's the so-called break-even point. And the conclusion is usually simple. If you live past the break-even point, you should wait. Now, the math on these charts isn't the problem. The math is accurate. The problem is what these charts are leaving out, because they don't show how Social Security interacts with your investment portfolio, how spousal and survivor benefits really work, the opportunity cost of waiting, early retirement cash flow stress, or the flexibility you still have after you claim. See, Social Security is not a standalone decision. It's just one lever inside a much bigger system. And once you understand that, the decision becomes a lot more nuanced. But don't get discouraged, because now let's look at the 5 reasons why taking Social Security at 62 may be your best bet. Reason number 1, you don't have a long life expectancy. Now this reason seems pretty obvious, right? But this is also the one reason that people tend to avoid talking about. See, Social Security is fundamentally an insurance program. And if you don't live long enough to reach the break-even age, delaying benefits simply doesn't pay off. Now, this doesn't mean you need to know exactly how long you'll live. None of us know that. But good planning requires honesty. You can reasonably evaluate your current health, your family history, chronic conditions, and how you feel physically today. Now, a common argument I hear is, well, life expectancy in the US is around age 79, so why would I assume anything shorter? That statistic is widely misunderstood. First, age 79 is life expectancy at birth. If you've already made it to age 62, your remaining life expectancy is actually much longer, often somewhere in your mid-80s. But the second point we need to remember is that averages don't plan retirements. Individual circumstances do. If your health suggests you may not live well past the break-even point into your mid-80s, delaying benefits in pursuit of a larger check later may mean you will never get to fully enjoy what you've earned. In those cases, claiming earlier aligns income with reality, not with the spreadsheet assumption. So please take a moment and be honest with where you're at longevity-wise, because it could end up being the difference between enhancing your retirement with Social Security benefits and never seeing a single penny. Reason number 2, safeguarding your portfolio. This is one of the most misunderstood aspects of Social Security planning. Most people frame the decision as, do I want a smaller check now or a bigger check later? Well, that framing completely ignores the portfolio aspect of your retirement entirely. If you delay Social Security and you're no longer working, something else has to fund your lifestyle. And that something is usually your investments. When you claim at 62, 2 important things happen. First, you reduce the amount you need to withdraw from your portfolio in the early years of your retirement. That can reduce sequence of returns risk, potentially preserve principal during volatile markets, and extend the life of your assets. Second, even if you never invest $1 of your Social Security check, you're effectively allowing your portfolio more time to potentially grow by not forcing withdrawals. And what traditional Social Security charts fail to show is this opportunity cost. Delaying benefits can require selling investments that might otherwise continue compounding. Over time, that growth could have offset or even exceeded the benefits of waiting for a larger Social Security check. Now, of course, there are no guarantees in the markets, but ignoring the interaction between your portfolio and your Social Security decision is a planning mistake. Asset allocation plays a major role here, and it's one of the areas where working with a financial advisor can make a real difference. How your money is invested, when you take Social Security, and how much you ultimately pay in taxes are all connected decisions. They should be coordinated as part of a single intentional financial plan, not based on what your neighbor did, not on advice from a friend at work, and not on a rule of thumb you found online. Your situation is unique, and your strategy should be too. Reason number 3, you and your spouse have an age gap or a longevity gap. This is where one-size-fits-all advice really breaks down. Social Security is not just about your benefit. It's about household income across 2 lifetimes. If one spouse is likely to outlive the other by a meaningful margin, delaying benefits for both spouses is often inefficient. Why? Because when one spouse passes away, the survivor does not keep both benefits. They keep the higher of the two. This means delaying your own benefit may not increase lifetime income if it's ultimately replaced by a survivor benefit anyway. In those cases, claiming earlier can provide years of income without reducing what the survivor eventually receives. So picture this. One spouse is 80 years old and already collecting the maximum Social Security benefit in 2026, which is about $5,181 per month. The other spouse is 62 and deciding whether or not to claim her own benefit. Based on her earnings record, she would qualify for the maximum benefit if she waited until age 70. If she claims now at 62, her benefit would be roughly $2,969 per month. If she waits 8 years to claim at 70, her spouse will be 88 years old. And if she waits until the traditional break-even point to make waiting worth it, her spouse would be well into their mid-90s. So here's the key planning issue. Once her spouse passes away, as we said, she doesn't keep both checks. She keeps the larger $5,181 survivor benefit, and her own benefit goes away, regardless of whether she claimed at 62 or waited until 70. So the real question becomes this: does it make sense to collect nearly $3,000 per month for 8 years, knowing that it won't reduce the survivor benefit she'll ultimately rely on anyways? In a situation like this, where there's a clear age and longevity gap, the answer very well could be yes. This is exactly why Social Security decisions shouldn't be made in isolation. The goal isn't to maximize one benefit on paper. As we said, it's to maximize income across both lifetimes. And again, this isn't strictly about age gaps. Even spouses close in age can have very different health profiles and therefore have a longevity gap. And in those instances, Social Security planning should reflect that reality. Reason number 4. Claiming at 62 can unlock family benefits. This reason doesn't apply to everyone, but when it does, it can significantly change the math. As we've already proven, Social Security isn't just about your retirement check. And in certain situations, claiming your benefit is what unlocks benefits for other people in your family. One example is dependent benefits. If you have minor or dependent children, claiming Social Security may make them eligible for additional benefits based on your earnings record. These benefits are time sensitive. They only exist during a narrow window, and if you delay claiming too long, those benefits simply disappear. That means waiting doesn't just delay income, it can permanently eliminate income that could have otherwise been received. Another example involves spousal benefits. A spouse generally cannot collect a spousal benefit until the primary worker has filed. So delaying your benefit may also delay or entirely prevent receiving benefits that could help support household cash flow. Now, on its own, this usually isn't a strong enough reason to claim at 62, but when combined with other factors, health, portfolio considerations, or income needs, it can absolutely tip the scales by maximizing total benefits received by the household over time. Reason number 5. Sometimes you simply need the income. So yeah, this is the least glamorous reason, but it's probably the most realistic for a lot of people. Retirement rarely goes exactly as planned. People retire earlier than expected, jobs end unexpectedly, markets don't cooperate, expenses show up that weren't on the spreadsheet. If delaying Social Security forces you to take on high interest debt, sell investments at the wrong time, or create unnecessary financial stress, then delaying may not be the smart decision people always assume it is. Let me remind you that Social Security exists to provide income. Using it when you need it is not a failure of planning, it is planning. And here's another piece of advice you seldom hear. Claiming early does not always mean you're locked in forever. In certain situations, Social Security gives you the ability to pause or suspend your benefit after you've already started it. When you do that, your benefit can begin growing again from that point forward, just as if you had delayed claiming in the first place. This can be especially useful if you needed income early to bridge a gap. Maybe you're bridging to another job, business sale, or another income source, and later find that you no longer need the benefit. It's not an option that works for everyone, but for the right person, it creates flexibility where most people assume none exists. Remember this, the worst outcome isn't taking a smaller Social Security check. The worst outcome is damaging the rest of your financial plan in order to chase a theoretically larger check later. Now, I want to give you one final bonus reason to potentially consider claiming at 62. It's possible that Social Security will change down the road. Now, this video isn't about fear-based planning. Letting fear dictate how you plan for your retirement is a bad path to go down. But it is reasonable to acknowledge that future changes to Social Security could potentially affect benefits, particularly for higher earners. Claiming earlier can sometimes reduce your exposure to future rule changes. Now, that should never be the sole reason to claim early, but it can be a part of a broader planning conversation. So, especially if you're a high income earner, keep this thought in your back pocket. So if I've done a good enough job explaining the 5 reasons in this video, I hope you now understand that relying on rules of thumb or simple break-even charts is risky when it comes to making your Social Security decision, because the right decision actually depends on health and longevity, portfolio design, spousal and survivor benefits, income needs, taxes, and flexibility over time. Now, as I mentioned earlier, we can model these trade-offs for you for free, and you can see how Social Security fits into your full retirement plan, just like we do every day for our clients. So, click the link in the description or scan the QR code on screen to start the process of receiving your free video review. One decision, big consequences. Make sure you're looking at the whole picture. Thanks for watching.